song that gives Ron PTSD every time I play it. And let's see. All right, welcome to Matt Gaines Live. I'm so excited to have you guys here, and I have two insurance experts with us. We are going to learn about insurance mistakes, insurance misconceptions, and insurance costs. You have 1 hour, and I'm going to fill you guys with lots and lots of information. For those of you who are on LinkedIn, please go to YouTube. That is going to be soon our new platform. We're going to push everybody toward YouTube. All right, so let's get started. I've got Matthew up in Toronto, Canada, and if you pay attention to his windows, he's got some big storms going on back there. And Matthew, you introduce yourself to the group.
All right, Matthew Yeshin. I'm based in Toronto, Canada, work for Marsh. I have been doing insurance for a pretty long time. It's what I came out of school to do. Started as Marsh's main focus traditionally has been the larger cargo owners or larger companies. So my specialty at the start was marine insurance for large shippers. So that's where I got my background from a cargo insurance perspective. Shifted over to looking at logistics and freight forwarding. Actually, it was freight forwarding before freight forwarding and logistics was sexy. Have been doing it for a decent period of time now. Seen a lot of the transition in the industries, particularly with respect to the load broking space and how that's developed from basically being no contract to almost all contract. And that's really my area of specialty now. I am Canadian, so I talk a little bit funny sometimes. But being Canadian, I get a good perspective on US because all of the Canadian logistics operations and carriers are looking down to the US as opportunity. So we know the US rules pretty well. Sometimes we know the US rules better than the US carriers know the Canadian rules.
I'm glad you addressed that because when I put you in as an expert, I did get worried that people would be like, oh, he's from Canada. And despite my heavy Canadian following, I was worried they'd be like, oh, he's only going to know about Canadian law. But I have known, for those of you out there, I have known Matthew my entire career, and I have worked directly with him, and he has helped me through some difficult issues when it comes to insurance and coverage and clients who had unique freight. So I wanted to bring him to you guys because he is an expert in this industry. And also I knew my Canadian followers would be so happy to see a fellow Canadian. Okay, down at the bottom is another one of my favorite people, which is Andrew. Andrew, could you introduce yourselves? And make sure to tell everybody how to say your last name because I had a lot of fun with that.
All right, sounds good. So my name's Andrew Ladebauche. I'm with Reliance Partners out of Chattanooga, Tennessee. We are a retail insurance broker that specializes in transportation and logistics. Similar to Matthew, I've basically done this my whole entire career, straight out of college. Worked for a couple firms, basically focused really on the asset side and the carriers, providing insurance to them. I grew up in the industry. As my father retired from TA, so he's more in the truck stop and did some logistics in the military. So have a love for it. And it's been pretty fun and exciting over the last few years, like Matthew said, to kind of see everything that's come about, especially in the freight brokerage world. Yep. Obviously, it's changed tremendously. And hopefully we can address some issues and questions that people may have today.
And I agree. I hope so. I'm glad you said that because today the goal is going to be to address common misconceptions, to help people understand where they could get in trouble with insurance. And when I say people, I mean shippers, brokers, and carriers. And so I submitted a poll to everybody and I posted it on LinkedIn as well. And in just a minute, I'll cut and paste it into YouTube when I have a second. But I submitted a poll. It's going to guide us through these discussions. And it's also, I'm trying to illuminate that there are a lot of insurance resources out there, but there are two problems. One, sometimes they're not applicable and they're hard to understand because insurance is hard. That's the first problem. Second problem is, and especially for shippers, sometimes the resources do not apply to transportation. So shippers will be deferring to their legal departments who do not have expertise in transportation and will give shippers a perspective with general insurance principles versus transportation principles. So I'm trying to bring you experts, shippers, and brokers and carriers so that you know we don't use insurance brokers who don't specialize in our industry. and you have to research them to make sure they specialize in our industry. One of my favorite things about Reliance, neither one of these companies are paying me, they're my friends. So Reliance and I have been working closely together. The reason why I love Reliance is because, like Matthew, they're very, very smart. And Reliance people have that industry experience. So they kind of understand a lot of our pains. One more point I want to make today and illuminate to you is that if you can't hire an attorney, or you don't have easy access to a transportation attorney, your insurance brokers, they're not attorneys, but they help you with risk management. They're actually your best friends when it comes to risk management. And for those shippers out there who can't reach out to their legal department because they don't know transportation, perhaps some of your insurance brokers can help, depending on the size of your company. So let's get started. I just wanted to lay out the groundwork here because I'm very intense about this topic. And I think we lost Matthew again because of the storms, but he'll pop back in. But let's start with the first question that I have. And I see V is on YouTube. Lisa Petty went over to YouTube. Chris Jolly's on YouTube. Amanda Miller. So everybody go on over to YouTube. That's going to start to be our new platform, unless we're doing like a mayhem and we'll stay on Zoom. But here's what we're going to do. Andrew, I had put the first question in our poll. The question is, shippers should, not they already do, shippers should require brokers to have general commercial insurance of $1 million. And Matthew's in the dark now.
I am completely in the dark.
Are you on your cell phone?
I'm on my cell phone. I'm hotspotting from my cell phone. I'm really sorry.
Good, actually. Well, let us know. It's kind of cool having you in the dark and having you as our dark angel of insurance right now.
Most people are in the dark about insurance, right?
So I just rolled out our first question to everybody. It is geared towards shippers. And Matthew, you're getting blindsided by this question.
Ooh, nice.
The question is true or false? Should shippers require, should, not do they, it's should they require brokers to have general commercial insurance of $1 million? So Matthew, if you were a shipper and you only had a couple policies that you could require from a broker, would general commercial insurance of $1 million be on that list?
First off, as a shipper, I know that I can demand whatever I want from the broker, and they'll probably agree to it because that's the way it works. And that's what the legal department.
Bitterness inside of me with this question. You hit right on it.
So basically, they're going to give the whole suite of requests that they normally ask for. They haven't got a clue what the broker's actually doing, what their role is, and they don't understand how the GL policy would or wouldn't respond. They just know that they have to request it because on every contract you ask for property, GL, auto, workers' comp, all the standard stuff, and they just include it. So, generally speaking though, and I guess the point is it was not really relevant because it's not necessarily a cover that is going to differentiate one broker from another. But what they do come back and sometimes say is, okay, well, if I'm dealing with a broker that can't get $1 million, is that a really good broker? So if the broker can't get insurance, maybe that's a broker that I shouldn't be using. And that's one of the comebacks that shippers will say as to why they ask for GL, even though it's not really the coverage that they should be looking for.
Okay, shippers, to all my shipper friends out there, stop wasting your time with that general liability insurance when it comes to brokers. Just stop. It's a waste of your time. It's a waste of your breath. You're very busy. Just stop. You can require it. Go ahead. It's industry standard. But the coverage is garbage. It's utter garbage.
So what about making sure that it cascades down to the carrier? So that's one of the interesting things that shippers look at as well. So they're asking the broker for coverage, but really they're asking the shipper for coverage or the carrier for cover. So the carrier probably should have some GL if they're walking around on the property.
Yeah, that's different. That's very, 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 very different.
Yes.
We're staying exactly focused on broker and shippers.
Okay, but don't forget, the shipper hasn't got a clue the difference between a broker.
And that's a point I'm trying to drill home really hard, is because shippers come to me often. They're like, oh, Cassandra, I want these 4 policies. And I was like, stop wasting your breath on that general. And the other reason I'm trying to say this too is shippers, I don't want you to actually think that general covers anything for brokers. Unless you go to a broker's property and trip and fall. What are you guys thinking it covers? It doesn't, Andrew or Matthew, shippers sometimes think that that general liability policy will cover contractual breach of contract between a
So
broker and a shipper only.
No. So basically, the GL that a broker would have doesn't do the contractual liability that they're expecting. It would be excluded. A broker's policy, generally speaking, wouldn't be extending. A broker's GL policy wouldn't extend to do that. There's more specific coverages for that. So basically, this is where you're getting into your cargo liability policy and your contingent cargo liability policy, your freight services policy, which actually is addressing the operations of the broker specifically.
Andrew, what have been your discussions around this topic? Or are you just kind of nodding your head like feeling?
No, I mean, I agree with them. I mean, I think it's one thing like we discussed in the past is a lot of these shipper contracts are really reading more towards carrier type coverages. So, I mean, a lot of the things they're requesting just generally don't apply. And as Matthew said, I mean, what we're seeing is that the brokers can get the coverage and satisfy the certificate. It gets sent off and they're approved to move forward. But, you know, basically what ends up happening is a claim occurs and then they realize, oh crap, we don't have any coverage there. What's going on? The broker loses the relationship with the shipper and the shipper moves on. So
yeah, that's spot on.
He hit all the bases there. And that's kind of the same thing that, you know, we've discussed now for years. And we've seen that really be the biggest issue. It's between kind of the disconnect there and the understanding of where coverage applies.
And I want to remind people that we're only talking about the relationship between a shipper and a broker. And when a shipper asks the broker, go out and get that general liability, commercial liability policy for $1 million. And oh, by the way, get an umbrella on top of it for $5 million. That's the only thing we're talking about. I'm not saying that brokers shouldn't have general liability for other reasons. I'm just talking about this one situation when you're contracting with a shipper and they're requiring it. And the reason why is I'm trying to educate people so that shippers don't come back and say, but you had this general liability policy I made you get. Well, that's nice.
And actually, I just want to make a point. Jason, who I know, is making a comment in the side that brokers should have GL policies. Absolutely should have a GL policy. We're not saying you shouldn't have a GL policy. It's just not relevant to what a shipper needs as evidence of insurance to cover off the shipper's potential exposure as a result of using a broker.
For those of you who are just joining us on Matt Gaines Live, I have two insurance experts with us, and I am encouraging everyone to go over to YouTube and see my YouTube channel and subscribe to it and join in on the chats over there. That is where we're going to start having the majority of our shows since LinkedIn can be a little spotty. What we are talking about is, and the bottom line is that when shippers require brokers to have general commercial liability, shippers need to understand that they're wasting their breath in general, and that there's really no useful coverage for a shipper under a broker's commercial general liability policy. So let's flip to the next question, because I know personally that I just blew a bunch of shippers' minds because I was getting emails before I made this poll. And they're adamant that they about lots of things, but I'm like, listen, you take it from the transportation experts. So here's the next one. And this is the one I collaborated with Andrew for. And I think this is the next question is what a lot of people are very curious about. So here's the poll. How much do you think a carrier pays for $1 million in auto insurance per year? And of course, I'm a lawyer, so I put in disclaimers, right? We're talking about average cost per year. We're talking about a carrier under 5 trucks, 3 years of consistent authority, and no like major accidents or high CSA thresholds as calculated by a third party company. So a lot of folks thought that the answer was $11,200 a year. And the next runner-up cost that people thought was $8,200, and the third was $7,500, and then some thought $6,000 per year. Andrew, what's the answer to this one?
You know, I think when you're going rough estimate, it's kind of a trick question, to be honest with you. I mean, the 11.2, you know, Northeast, South Florida, you know, West Coast, that's a really good guess, especially for just, you got to remember the question is only auto liability. Down, if you're talking 3 years, I mean, in our industry, obviously you read all the headlines, it's changing. You look at majority of the for-hire motor carriers that are out there, they're under 5 trucks. I don't think people realize that. It's not these huge mega fleets you see out there on the road. So a lot of these trucks that are pulling the freight for the brokers that are contracted with these shippers. Costs are rising. So one thing that kind of the disadvantage, and really sometimes I break it down to almost like a per mile cost, right? So, I mean, some of the small truck lines are paying 16 to 19 cents per mile versus some of our large fleets that pay 5 to 8 cents per mile for insurance. Now, there's different factors to that. The small fleets, they do not have the ability to take on risk, so they aren't taking on deductibles. They may not be in captive type programs, more startups, like you said, within 3 years of a business. But, there's so many factors: region, the lanes that you're running, the amount of carriers willing to quote. The small fleets, it's just getting fewer and fewer and fewer. That's why Progressive has taken the small fleet 1 to 5 units by storm over the last few years. Now they're the largest insurer, and what Progressive has done well is they do take into account where you travel. They've done a great job from a technology perspective, being able to rate accurately. And they appoint every agent in America, which is kind of to your point at the beginning. There's great agencies that specialize in transportation, but then there's a lot that don't. So if you sell a personal lines policy that's $2,000 for the year versus a commercial auto and a small trucker out of South Florida who's going to pay $20,000 per year, they're going to try to write the 20, and then all of a sudden they're truck experts, right? They're transportation experts. And so, there's a number of different factors. I think when you ask that question, we're just kind of looking at a lot of our book is small and mid and a few large fleet companies. And if you looked at kind of a consensus, if a company's in business 3 years, is doing the right things with good drivers, that's kind of just a good soft estimate, around 7,500 that we're seeing.
Yeah. And I think you did a great job making sure that everybody isn't going to take that 7,500 and run home.
Right.
Like, Andrew said, this is going to cost me $7,500.
Yeah.
Clearly, you guys, this is insurance. There's a lot of variables that play into this. Everybody's very intelligent who watches these shows. They get it. And I want to pause for a moment. $7,500 was the answer, by the way. If I wasn't clear, I can't remember. But I want to pause for a moment because actually both companies that are here and both individuals that are here, when I worked in-house for different companies, they were my insurance broker. And I want to illuminate, and I'm not getting paid for this. This is the true, honest Cassandra's belief. I want to illuminate the value of having a good insurance broker that knows transportation, because it's so important for you to listen to me on this, is that here's what I go to my insurance brokers for. Depending, and I say I as in like I could be lots of different hats, but if a shipper has asked you questions about your insurance coverage or their commodities or given you a contract and you don't even know if your insurance covers it, that's one thing that I reach out for insurance brokers for. The other thing that I reach out to insurance brokers for would be for standard contracts. They're actually a really good resource for those. They're often better than anything like TIA or ATA pushes out. Any questions around risk? And they also have a lot of risk programs that you can watch, like webinars and experts. So when you pay for insurance, make sure your broker is going to be your best friend by your side. That's how I have been successful in my career. Did I miss anything, Matthew or Andrew? A value add? I'm not trying to sell here. This is truly my honest.
No. Just remember that the broker, they understand the issues, and a lot of times we're happy to get involved with the customer directly to try and understand what the customer is looking for. So, it's in everyone's best interest to have a clear understanding. So you shouldn't hesitate to bring your broker in to talk to a customer about why they want certain insurance requirements or what specifically they're looking for when they're trying to carve out or create a contract, because that's going to help ensure that if a claim does happen, everyone kind of understood what the expectations were, which is a big part of the role of the broker.
Smart. Good points. Let's go on to our next question. So this one was me being a little angry, salty, saucy, whatever you want to call it, because I have a lot of built up anger over the years about this policy. So if you answered, so the question on the poll is shippers and brokers, carriers too, but they tend to know. Do you know what a scheduled VIN policy is? And it's not a trick question because it exists. And many people don't know what it is and they have never paid attention to it until they're burnt by it. And I have been burnt many times in my career. I hate scheduled VIN policies, but they're like, I can't get around them. I can't get away from them. So as a shipper and a broker, Andrew or Matthew, whoever wants to answer this, what does it mean when you have one carrier that has like full primary coverage from TTN auto liability, or another carrier that has a scheduled VIN policy with, I don't know, who keeps producing these scheduled VIN? Progressive? Is Progressive a scheduled VIN?
It is. So, and Matthew,
auto is scheduled VIN too, right? Because I've been burnt by the cargo, but the auto part can be
Right.
scheduled in as well. Okay.
Yeah, and sometimes it's by the size, honestly, of the fleet. I think that's one thing, and Matthew would probably be a great resource for this from seeing the shipper contracts. A lot of times they will state any auto, and some of these brokers are signing that, and then, you know, the carriers that they use on the loads. But a lot of these companies, like we just discussed, if they're under 10 trucks, it's 99% chance they are on a scheduled auto policy. So, you know, try to relate that to kind of people that aren't in insurance. It's your personal auto. All right, let's just relate it to that. So if you go and buy a car and you do not schedule that policy on whoever you're with, State Farm, Farm Bureau, it doesn't matter, and you drive that auto and have an accident, they will not cover the claim.
So if I don't tell my own insurer the VIN number, hey, I just bought a new Vitali likes Lexuses. I just bought a new Lexus and here's the VIN number, insurance company. If I don't tell them that and I'm driving around and I get in an accident,
right,
there's no coverage, right?
Right. Typically, sometimes with a new car, they'll give you about 72 hours, but commercial auto policies, typically not. Before someone can take a new tractor that they are buying or leasing and putting it on the road, they have to have proof of insurance, and they have to notify us as an agency and put that tractor on the policy. And it goes through all your policies. So it's not only auto liability, it's physical damage and cargo. Especially with the brokers, it's important to know that, because these shippers, a lot of times you'll know when they don't have it for auto because you're going to be dragged into the lawsuit. But cargo, which is the majority of the claims that we see, there will be zero coverage for the carrier that you put on the load if it's on a scheduled policy. When you get to fleet business, which in our world we kind of consider that, you can just say 10 and up. So 11 tractors and up. A lot of policies are written on reporting policies or any auto. So they can be kind of a composite rate, which means it's still kind of a per unit, but aggregate, and the coverage symbols are broader, or you can pay per mile or revenue for the year. So it just is it's a more inclusive coverage. It's one of those things that if you're buying or selling equipment or leasing equipment, it's much more friendly to you as a policyholder and as a shipper and broker, because regardless of what vehicle I take, if I have one that breaks down, I go lease a new one. I do not have to call Reliance to add that truck or call Marsh to add that specific unit.
That's nice.
You know, and it's just a broader coverage for them. So I think that's one thing, you know, we don't want to dig too deep, like you said, because then everybody will fall asleep. But just think, it's one thing, 10 units and under, it's probably scheduled. 11 and up, reporting, but make sure to ask. I think that's one thing that's very important, because everybody's hustling, trying to move freight, trying to get those loads covered and make some commission, but make sure you know who you're putting on a specific load and what kind of policy they have. At least be somewhat knowledgeable of it.
Matthew, I am a shipper or a broker, and a carrier has gotten in a very bad accident, and I'm sued. And I tender defense. I'm sued, and I say, well, wait a second, the carrier is the one who caused that accident. I'm just a shipper or a broker. So I give the party that was injured, I give them the insurance certificate and all the information of the carrier. And I say, go after the carrier and their insurance company. And it's a scheduled VIN policy, and the VIN number, which is the truck that got in the accident, that VIN number is not on the policy. What happens, Matthew?
Well, here is where you get a problem. So, and this is where the broker is going to get drawn in. And, you know, we had a great show on Friday with plaintiff's attorney talking about how the courts are looking to draw in essentially deep pockets. And certainly if you're a deep pocket and the underlying carrier who caused the accident doesn't have any insurance or any money to address it, they are going to find a way to draw you in. And they're going to draw you in on the basis that you should have done a better job checking to see that the underlying carrier actually had some reasonable amount of insurance. And then, of course, the reasonability comes in. So from that perspective, as a broker, you are likely to get drawn into a suit, which is going to cost you. You're going to have to make sure that you've got some broker's liability cover. So we talked a little bit about the GL, but we also want to make sure that brokers have coverage specific to their liability or their contingent liability in the event the underlying carrier doesn't have insurance. This used to be kind of a non-owned auto assumption, but when you've got no assets, it may not be as clear cut where you're going to get the coverage from. Certainly a standard GL policy may not be adequate for that. And then, of course, you also have to look at the relationship you've got with the shipper, because chances are the shipper is going to get drawn into it as well, certainly if it's a severe accident and there's not enough insurance.
Their name's on the trailer.
Oh, even better, right? The name's on the trailer. The shipper might have an indemnity provision in their contract with you as the broker. And now you've got a double problem because you're also defending the shipper's liability in that action because it's in the contract. So it can be pretty significant if the underlying carrier doesn't have adequate insurance, and there's even a minor incident can quickly turn into a significant incident, again, as per your show on Friday.
I can feel a lot of my business folks that are like, how am I supposed to know if these carriers have a scheduled VIN policy, which basically means that if the carriers who are well known for owner operators, they run freight under different MC numbers, lots of different, they may have 5 different MC numbers. And if that entity that's holding the MC number doesn't report the VIN number to their insurance company of the owner operator, hopefully the owner operator has their own, but it's another topic for another day. What happens is that owner operator is running a load under an MC number, and the MC number didn't report the VIN number to the insurance company. No insurance coverage. So Cassandra, what am I supposed to do with this? Are you basically telling me that 75% of these trucks on the road, these MC numbers that have a fleet less than 10 trucks, their odds are they don't even have insurance? Cynical Cassandra says yes. That's odds are yes. What am I supposed to do with that? All right. This is the risk of using something like RMIS, you guys, because sometimes you can see on the insurance certificate, it says the VIN numbers or it says schedule VIN right there on it. And then you'll know, oh, here it is. I have tried everything to figure out how to, from a risk management perspective, weed out these schedule VIN number policies. And you can't, everybody has them. It's too hard. And then you're like, all right, before I dispatch, I'm going to check the VIN number that the driver gives me with the VIN number on the policy. Operational nightmare. Sometimes they lie. So it's just a headache. So here's what I've done for those of you out there having a panic attack. If you have a carrier that is less than 10 trucks, odds are they have a VIN policy. Look at their insurance certificate, see if it has a VIN, or ask if you have a scheduled VIN policy. Here's what I want you to do. If you're running a lot of loads for them, so run a report and find out how many loads are they moving. Are they moving like a ton every month? Time to negotiate with that carrier to get a primary policy. The risk is too high. And then everything else, you're going to have to know there's a good chance that these carriers don't have insurance. Cynical Cassandra, all the time I assume these carriers don't have insurance. I think that's the best rule of thumb, but that's cynical Cassandra. Anything else you guys want to add on the schedule VIN policy discussion?
I mean, I think you hit it. I mean, I think, but it's difficult too, right? Like you said, it's just so many of the carriers that are in their network are on schedule policy. So, I mean, it's hopefully we'll move eventually to a broader policy form for all transportation risk. It's just going to take some time. And I think that's kind of a misconception, is everybody just assumes that they have coverage because there's a certificate that they received. And whatever system they're using shows coverage in place, and then they just give them a load and, they drive off. But we see it all the time. We see claims and it's an owner operator. I mean, that's a great example. A small fleet that says, oh, I got someone that wants to come drive for me. They never tell us, and the next thing you know, they rear end someone, turn a tractor over, whatever it is, car goes damaged. There's no coverage there.
Yeah. And, the interesting thing is I know that sometimes you get upset with the insurance companies for not stepping up, but often there's a reason why they're using these types of policies with those carriers. And, they don't want to defend because they know that the carrier, some of the smaller carriers, might be doing this on purpose. Declare 10 vehicles, run 15, hope the 5 don't get into an accident. It happens. And that makes it challenging.
I would say that if I was an insurer, I wouldn't want, because basically, if you just say, all right, anybody who runs a load under your MC number has coverage, that is so scary. I'm sure. Hence the reason why the policy is more expensive. For those of you out there who are like, whoa, I have to vet VIN numbers, I have to do all this work, blah, blah, blah. I will tell you that usually it depends on how fast you're growing and how much freight you have. Over time, you'll start designating certain people that are very they like books, they like to read, they're introverts. They're good people to vet carriers for you and go that additional mile. I do have quite a few YouTube videos out regarding how to vet a carrier, and I'm going to continue to push those out because I'm very passionate I've built compliance departments. I know the nitty gritty of how to vet carriers. But don't worry too much. What you should do, the best bang for your buck, is to look at who's running the most loads for you, run a report, and then tell them they have to get primary insurance, primary cargo, and primary auto for those carriers. Let's jump to the next question. This one is one of my favorite ones. I have a feeling I got to be careful because I feel like I'm the doomsday of insurance death. And everybody's like, oh my God, these carriers don't have insurance. They don't. Here is a best practice question on this poll. Is this a best practice? Brokers and shippers should collect insurance certificates from carriers once a year. This is like a exam question because there's so many things fucking wrong with this sentence. I like made me so giddy when I wrote it. And I'm like, only my nerds that follow me and they're very like heavy into risk and compliance and insurance, they're the ones who are going to truly see what I'm up to in here. So Andrew or Matthew, whichever one, with regards to risk management, brokers and shippers, should they be collecting insurance certificates directly from carriers once a year? And it's okay if you say yes.
No, certificates are a waste of time, but they need some form of finding evidence. Chances are the certificate is wrong anyway, but you need some way of actually doing some due diligence. So to your point, you need due diligence. Is the certificate the best way of ensuring that they've actually got the coverage you need? Ooh, lights came on.
Yes, look, I think the sun's coming out too.
Anyway, sorry about that. So yeah, it's there's so much debate in terms of whether you should refresh on a weekly basis, on a monthly basis, on an annual basis. But how do you administer it? And how do you administer it when you know that chances are the client that you, or the carrier you're trying to weed out is probably not giving you the best cert in the first place?
It's okay. So let's touch on that. So first part of this question was collecting insurance certificates from carriers. I have a big problem with that because as someone had said, they messaged me and I've learned on my own that you can download, can't you, Andrew? You can just download like blink, like from some ghetto websites.
Yeah.
Blink insurance certificate forms. You can just type in whatever you want in there. And then
you have an Adobe program, they can fill it in themselves.
I've seen my signature on so many certs that I didn't.
Oh my God, Matthew. That would scare me. But it's true. It's like
true. Actually, it's funny. So one of the comments is that have the agency send the cert directly to the shipper. So have the broker send it to the shipper or the broker directly. So of course the insurance broker's got to be honest, right? That's not the case. So we've seen plenty of situations as well where an insurance broker has sent a certificate over to a broker or to a shipper where they're saying, oh yeah, we've got all this coverage. Well, they haven't checked the contract. They haven't checked the requirements. And in one case, which is one of my favorite stories, is I called the broker on it because the underlying coverage was so restrictive, it had no way it was going to respond to the requirements of the broker that the broker that was requesting it, the shipper that was requesting it. And the broker said, well, if you read the certificate, you would see that it says as per policy wording. So it's like, well, are you saying that I can't rely on the certificate? I have to read the policy wording to make sure that it actually follows? And this is an insurance broker. This is a licensed insurance broker that's telling me this. It's shocking. So, that concept of we got to get it from the insurance broker, so it's going to be true. Well, maybe if it's, from one of us, it's true. But you can't guarantee that just because it's coming from an insurance broker, that it's going to be an accurate reflection of the coverage that's required to meet the contractual obligations that you might have with a shipper.
And I would like to illuminate a couple things that you said. So first of all, I know in there, people are panicking a little bit. And they're like, I thought I was doing a good job. I knew that these insurance certificates were fake. So I was making the insurance broker send them to me. And then, I thought I was doing a good job because I bought this really expensive subscription with this third-party company that just vets the insurance for me and then tells me. So don't worry, okay? As your company gets larger, you will start to get burnt a little bit by some of these issues, and then you'll start to have you'll hire someone who will vet insurance certificates, who will get a little bit more in the weeds. There is no, and I dare anyone to challenge me on this. I can't wait for this debate. when it comes to vetting carriers and vetting insurance and reducing risk, there's no electronic substitute for a lot of these problems we're talking about. The scheduled VIN numbers, making sure the VINs are there, the truth of the certificates and reviewing the certificates. So over time, you're going to have somebody, and they're going to learn from probably my courses how to do this. So don't worry now. When you get burnt by your first load or you start seeing issues, that's when you start investing in risk management. That's my opinion. And I've worked for a lot of brokers and shippers and carriers in the country. Andrew or Matthew, did I say anything debatable that you want to push back on, or you want to just fucking bring it? Let's go.
Not here.
Okay.
It's a terribly antiquated industry. Like, I'd like to say more about insurance as being great, as being, really a way of providing coverage. But when it comes to documentation and process, it's not a strong industry. It's right. Actually, you talk digitization and where the industry is going. That contract certainty is definitely going to go a long way to smart contracts is going to go a long way to improving the validation process, but we're not there yet. And it's such a challenge to implement. And there's going to be resistance because people aren't going to want to disclose it because the industry runs based on, a really antiquated structure now, and not everybody wants to change.
Andrew Teal, I'm trying to run a live show right now. So when you write in digital insurance broker, Uber insurance, I'm laughing. We're also tired of digital anything, but he's right. If we did have a third party that did have labor resources looking at these insurance certs and verifying them consistently, because you can't just receive them. The other trick to my question was once a year. Can't just receive insurance certs once a year. It just doesn't roll. I don't roll like that. Because if the carrier misses one premium payment, no insurance. How are you supposed to know?
Well, yeah, and then you've got the other thing. Well, the broker's going to notify you, give you 30 days notice if the policy doesn't renew. You know what? I mean, it's endeavor to provide 30 days notice. The reality is that if there's hundreds of certificates out there, and certainly if the broker hasn't been advised or the underwriter hasn't been advised of where the certificates have gone to, chances are you're not going to get notified if it doesn't renew. And the other point is your renewal dates are all over the year. So there's no one day a year you can do your certificate updates. You'd have to be doing it constantly to match all the different renewal dates for all the different carriers that you're working with.
Yep. So for those of you having panic attacks out there, don't worry. I'm trying to just show you a different light. I'm trying to show you everything that's kind of wrong in the industry when it comes to insurance, but there's a lot of good, like Matthew said. And also focus on those lanes and those shippers or those shippers or the commodities that are high value, things that are just precious to you. You're going to risk like half your business. Focus on that segment of your business and then look to those carriers to see who's running those loads and be more strict with those carriers. That's usually what I teach so that people don't have blanket policies and then they don't have can't find capacity because most carriers have these garbage insurance policies. I'm going to pause on how much I'm blowing people's minds right now because I know it, I can feel it, and I'm used to this. And I don't want people to leave like depressed. When Cassandra says that most carriers do not have insurance because they don't. I'm going to take some questions, unless you guys saw some questions, and I'm going to take them from YouTube this time. So for anybody who has questions, I see there's still a lot of people on LinkedIn, still a lot of people on Zoom. Head over to YouTube. And oh, by the way, if you want to know how to vet carriers, and if you want to know more about insurance, I have a ton of old school videos. They're scrappy, but they're good. And so here's what I wanted to do. I want to look through some of these YouTube comments. And I heard that somebody asked what RMIS is. And I want to make sure that I articulate to some of our shippers that brokers will often hire a third-party company. I think it's pretty expensive. And they collect insurance certificates from carriers, and they do a lot of other services as well. And they monitor the validity of not the validity of the insurance, I should say. At the time they receive the certificate, whether the insurance is valid pursuant to the certificate. I hope I'm saying that right. Andrew or Matthew, is there any?
Yeah. I mean, that's right. I mean, I think it's what Matthew said, right? I mean, we're not saying that they shouldn't do it because like Matthew said, they have to do their due diligence. So if they're dragged in, they can say, hey, here's where we had and showed proof of insurance. So these programs, they do the best they can, but you still run into the same issue that we just discussed. I mean, a certificate is a piece of paper. And like Matthew said, we see it all the time, or we get accounts that call in that have a claim. The sad part is if an agent sits there and puts, my favorite's all risk cargo, and this is probably up Matthew's alley there, but they'll have some basic cargo form and they'll put all risk, send out the cert, has a claim, and then you have someone that's an entrepreneur trying to build a business that's 5 trucks and been doing it, and that claim can put them under, and they've sat there trying to do something their whole life. And so we see the fraud too on the insurance agency side, and it's you can read about it all the time, unfortunately, and it's like I said earlier, sometimes because it's big premium dollars, and people try to go after it, and it's unfortunate.
I have 2 questions that popped up that are gold that either one of you can take, but I have a feeling Matthew will probably take the first one, which is Matthew, if I'm a broker and I have a contract, wait, hold on, let me make sure I get this right. If I'm a broker and I have auto insurance and the carrier gets in an accident and then I'm sued, does my auto insurance always cover if I'm directly sued?
All right, so I'm not the auto guy, but I am going to make a comment from a brokerage perspective, because the traditional view is that yes, the non-owned aspect or the non-owned coverage in an auto policy, and whether you're in US or Canada, it may be different where your non-owned coverage is, because here the non-owned is in the GL, and in the US it's in the AL. So you may have an element of coverage for that under the policy, but it may not be what you want to rely on. And certainly if the auto policy you have is not an auto policy that's intended to do that, you may get a one shot at it, but you're not going to get it again, and you may not even get one shot at it. So be really cautious about using that. And the other thing to be cautious of is when you look up the excess tower, because you may have a primary auto policy with some excess, the excess may not agree to follow form to your underlying non-owned auto
That might be too
structure.
intense for this group.
I'm sorry.
God, you were so smart.
I can put some charts together on it.
Okay, and Matthew, here's what we're going to do. For those of you who are super insurance nerds, please message me or email me or something. Be like, I want more of Matthew's level of analysis. And we can give you lots more. You can go so into insurance, but it's going to be like this limited group. But insurance is very interesting. No, actually, let me flip to Andrew. Andrew, I saw this in the comments, which was, okay, all these carriers run around with iffy insurance. I'm a broker or I'm a shipper. I have my own cargo insurance or auto insurance. I'll just rely on that if something goes wrong. Andrew, what's the first thing that comes to your mind when you hear something like that?
It probably won't react the way you think it's going to be. I think depending on, we covered this and you have some great videos on it, especially with, my business partners, Ronald and Chad, who come from the freight brokerage world. So, a lot of the programs we tried to put in place were real life experiences, right? So, 10 years ago, it was always funny to me when I started Reliance, and I was actually sitting in the same office as Access America Transport that was there at the time. A lot of contingent policies were in place. I wasn't even their broker at that time. Eventually, we came out in some of the asset type based forms. We're covering some of the large asset based companies that had brokerage exposure that came in. But it was all of a sudden, hey, we're a startup broker. We're having all these claims. We have contingent. It's basically a follow form. Depending on the exclusions that were within the policy of the carrier, there's no coverage reacting. The other problem, they give you a checklist. It's 4 or 5 items. Mm-hmm. By the time you go through that, and if you're moving millions of dollars or even $500,000 worth of freight for that shipper, and you have a claim, if it takes you 90 to 180 days to basically get that claim covered, you're probably going to lose your business. So I think just assuming that as a broker, because we have a cargo policy in place, you need to understand what you're buying. You need to understand the contracts you're signing or the contracts you're not signing, but still just see how it's going to react in a certain situation. And like you said, I think that's one area. And, I've enjoyed this call with Matthew and getting to know him just because, he understands brokerage world as well. And everything we see on the asset side for as many asset-based companies as we insure a lot of freight brokerages from startup to $500 million in revenue and more. They all face the same thing. It's just the coverage that has been allotted there, and basically that some of them have purchased in the past, is almost worthless, to be honest. You hate to say that, but there's some really basic contingent policies out there that are inexpensive. You buy it, you think you have coverage, and then when you don't, it's cash flow is everything, even on a freight brokerage versus trucking. When you have a claim and you have to pay $50,000, or you just basically don't do business with that customer anymore, that's your choice, but it hurts.
And if I can actually
Now you'll know why I brought beer to the party, but go ahead.
No, just adding the one thing is that insurance program that you've got is also your lifeblood, because without insurance, you can't do business. So if you blow up your insurance on the basis that you didn't do due diligence with the underlying carrier, now you can't get insurance yourself. And if you can't get insurance yourself, or the cost is prohibitive, now you've got a problem doing your next load or your future loads, because insurance is tough that way. And the market's not easy right now. So if you do run into a problem and you haven't got a good policy in place, the cost of insurance next time when you try to go and put one in place could be prohibitive.
Yeah. So the points that I'm trying to drive home today, besides scare the shit out of everybody, I'm scaring the shit out of everybody for a reason. I do not want you to get comfortable with insurance. I don't want you to think, oh, I bought my insurance packet and it says all this stuff and I have the policy. So if anything goes wrong, I'm taken care of. Yes, shipper, I have lots of insurance. Or the shipper thinks, oh, I go through these brokers that have lots of insurance. Stop. Insurance is not black and white, just like litigation, just like everything else we touch on, rates, everything we touch on this show. Everything's more complex. So the mindset that I bought insurance or they have insurance, we're good. Get rid of it. Get it out of your head. And what will happen when you remove that mindset, you're going to start thinking like a true business owner, because you're going to start seeing where there might be gaps or issues where you directly have to pay for something out of your pocket. And I could go on and on and on for hours on this topic of how many different things. So someone else asked, I just saw a question, a random one that popped up that's driving me nuts. I have to respond to it. So James posted on YouTube, hey, Cassandra, my brokerage GL is $1 million. Can I use carriers that only have $750,000? So first of all, James, I think you meant auto liability, not general commercial, because general commercial just jack shit in the transportation world. In this context. The second point is most of your shippers require brokers through a contract that the carriers they hire have $1 million in insurance. So if you hire a carrier that only has $750,000, you're going to be responsible for that $250,000 gap. Rare that that's going to happen and it actually gets to that point, but just want you to know that. And then someone else said, and I'll let Matthew take this point, which is, Matthew, my contract with my carriers say that they need to have $1 million in auto, $1 million in general, 100 in cargo, and whatever workers' comp is per state. I have that in my contract. So why am I vetting insurance when they have that? I have it in my contract. Why do I have to vet insurance?
Because they don't have enough money to pay the claims that might come up if they don't have insurance.
Just picking on everybody now. They don't have enough money, you guys. We need that insurance coverage.
That's the thing. If they had the money, you wouldn't need the insurance. So the issue is why you have to vet it is if that carrier, if they don't have $1 million of auto liability, even though they said they've had it, and they don't, they're not going to have $1 million. If we've talked to this with shippers before, it's like, oh yeah, go and take their trucks. The shippers don't want their truck.
Come on. And to do that is a lot of work.
So that's why you have to actually make sure that they've got it, even though it's contractually there. But it's such a good point. It's like you've asked for it contractually. Why do you have to go and check it? But that actually gets to another question as to why you need to be added as a named insured on it. But
oh yeah, we were going to talk about that.
Save that for another day.
Yeah, let's save named insured, additional insured, waiver of subrogation, all of those really intense kind of conversations. We're going to save that for a one-off podcast by Andrew Deal. And we're going to save it because that's going to take us like an hour. But don't get too comfortable with insurance certificates. So be uncomfortable with insurance is what I'm trying to teach everybody today. With regards to, Andrew, with regards to how much if carriers have to get $2 million in auto, Cassandra, dumb math, I'm thinking $7,500 a year for $1 million probably means they're going to be spending about $14,000 a year for $2 million.
Yeah, I mean,
it's
that's
hard to
simple
know.
math. That's a good way to think about it. I mean, I think the whole other issue is, just to be honest, as much as many companies as we insure and the partners we have, it's difficult enough right now. And I've talked with multiple large companies who are taking their insurance towers down. I mean, some from as much as $250 million down to $100 million just due to cost. So, as we discussed earlier, there's always premium dollars that these insurance companies are trying to get. The commercial auto market has lost money for the last 8 years consecutively. So who is going to put up $2 million in coverage? And if you own 3 or 4 trucks, what is that dollar amount? It's going to be substantially higher than, say, a 100-unit trucking company can get $2 million in coverage for. So, I think that's a thing that everyone's watching closely, but I think there's a whole nother issue there that, like we said, with the majority of carriers that are out there for hire being under 10 units, I mean, it could be pretty catastrophic, to be honest with you. I mean, it's so expensive to operate a truck. You have some states, California coming out with the electric vehicles and I mean, how much is that going to cost on top of higher insurance premiums and stacking on another $1 million? So, we'll be watching it closely. There's always going to be someone that will step in for that additional $1 million, but it's going to cost some money.
I go back to, and for those of you who are curious about the impact of insurance on litigation, last Friday or the Friday before, I had a very famous plaintiff attorney on this show who just utterly blew our minds, along with the accident expert who was great as well. And the plaintiff attorney had said something. Obviously, he's motivated for these carriers to have more insurance. But he also had said something along the lines of, if you can't even afford $1 million insurance, $7,500 a year, should you be driving an 80,000-pound truck that can kill people? It was an interesting point. We don't have to address it. It was an interesting point. Matthew, do you have anything that you want the group to know? Anything that I've missed today that's really important and going on in your world besides this? I'm pretty sure the sun's out now.
A year's worth of stuff that the group needs to know about shipper broker and broker carrier agreements. But no, I think we've got a good cross section. I think the point on certificates and vetting is so important to just understand. It's not the insurance industry necessarily that's doing this. It's just the way the industry has been used to provide evidence, to provide responses to contractual agreements that probably don't make sense and haven't been well thought out in the first place. So you're just trying to fit things together that don't really fit. And when you look at it that way, you try to question why you're doing it. That's when you start going down the path of, do they have the right insurance? Are we dealing with the right risk management structure?
Well said. Andrew, is there anything that you would like to leave us with? You are the Reliance Partners folks.
Yeah, not too much. I think, it's one thing if someone we obviously dropped a lot of information in this. We'd love to do it again. I'd love to team up with Matthew again on this. I think it's great kind of crossing all sectors, right? Because now it's just one big supply chain atmosphere with trucks and brokers and shippers and freight forwarding as well. So, I think one thing, if anyone has questions, you have my contact information and Matthew's as well. So, I mean, everyone can feel free to reach out, ask us questions. We'd love to do this again. Hopefully it wasn't too boring and we didn't dig too deep.
I know. I feel bad. I feel like we might have scared the ever-living crap out of people, which is good, you guys. I want you to think differently. I want you to avoid all the pitfalls that everybody else is making so you can be more competitive and you can make more money. Mad Gains, follow me on YouTube. Make sure you subscribe. Follow me on LinkedIn. Now you have Matthew and Andrew. Reach out to them. You guys, I put the links in so you can find them on LinkedIn. They're amazing. I'm bringing you smart, good talent. Thank you for joining us. Thank you to everybody for all the comments. I'll go through them and the questions and we'll try to answer them off the side. Take care, guys.